Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week, we're reflecting on last week's World Economic Forum in Davos. Monocle Radio had our usual setup in the High Alps, where we welcomed everyone from prime ministers to urbanists and from artists to economists. Of course, UBS too was very busy at the WEF, but luckily we managed to grab a moment or two to speak to not just one, but two of the stellar voices that were in Davos for the bank. We start with a familiar presence to listeners of this show, Mark Haefele, the Chief Investment Officer for UBS Global Wealth Management. Manning the Monocle Radio mics all week in Davos was my esteemed colleague Carlotta Rebello, and it was she who welcomed Mark to our pop-up studio just off the promenade. Carlotta began by asking Mark who he'd been talking to up in the mountains and what topics were on everyone's lips.
Well, I've been talking to a lot of press, a lot of clients and CEOs, people like that. Last week I was in Asia. The week before that I was in the US. And of course, the geopolitical environment is something everyone is talking about. I think each continent has a slightly different take on things. So, but of course, in that way, it feels a little bit historic with some of the speeches saying that this is truly a break with the past.
And it's been, as you alluded to there, hardly been a slow start of the year. How has the recent geopolitical turmoil impacted the markets?
Well, we saw an impact yesterday in the equity markets. I think a lot of people have looked at the equity markets and said, well, they did well last year, and that is true. But there's other things that we pay attention to, like the huge move in gold and industrial commodities, what's going on with the dollar as well. So if you look, I think there's quite a bit going on that creates opportunity, but also shows some of the risks out there.
Well, it really is hard to ignore, the current landscape and all the volatility that it brings across all sectors. How do you make then, I guess, good calls on your clients' wealth when you have such turmoil all the time?
Yeah, well, I think we're fortunate in that we cottoned on to the fact that the world was changing some time ago. I wrote a book that came out last year that said, there aren't free markets anymore. It's kind of big governments and their big problems, and that's where the big money is going. And so that seems to have worked well in the sense that governments are now picking winners and losers. I think we have some ability to analyze things in that sphere and apply them to the markets where, Warren Buffett is kind of famous for sitting around and reading filings from companies, which is how I started. But of course, you can have the greatest company in the world, but if it is invaded by troops or something like that, or gets a missile strike, it's not going to have a great quarter.
Well, I was going to bring in your book a bit later on in our conversation, The New Rules of Investing, but I want to look at some of the issues there because it really has been, that publication unpacks what to do in this, with all this change, geopolitics, demographics, all of that. Is it quite a poignant time to have a book like that out?
Well, I certainly think so. I wrote... why do people write a book today? Nobody reads books, but I think it's important if you have some ideas to put them out there and test them. So, of course, I'm very proud, to say that, we're focused on the big problems where the big money is going, like AI, power and resources, and healthcare. And sure enough, they played out and they continue to play out. So we focus our expertise in those areas because we think they're going to be durable themes.
And now, of course, wherever you turn, both here in Davos and outside, but AI is really dominating a lot of the discussion. We see just by walking down the promenade, the amount of houses and pavilions dedicated to either tech companies or directly to AI companies. Are you still seeing that when it comes to investment? Have we moved to monetization? Are we able to escape the AI bubble?
Yeah, I think that, there certainly are signs of a bubble in parts of the AI market because there are a lot of companies with very high valuations that don't make any money and need to continue to tap the fixed income market and borrow more money or the equity market, I guess, to fund their plans. And they're probably not all going to be equal winners. So that part is concerning. On the other hand, when you look at the large hyperscalers, they have certainly increased the amount of their cash flow that goes to capital expenditure on AI. But they of course, they're still profitable companies. I think the main part of what we're seeing is not a bubble. And then there is all the companies that are kind of outside of the pure tech industry that are now starting to apply AI and increase their profitability with it. And I think we're trying to shift more towards where are the AI benefits broadening out and how do we invest in those companies?
Now, UBS expects solid earnings growth to continue. What are the key drivers behind that optimism, and where do you still see some risks?
Well, some of the drivers for earnings growth are continued fiscal spending. The one big beautiful bill will add stimulus in the U.S. We have seen the U.S. consumer remain very strong despite a lot of the things that have gone on, and that's a key part of this. We also think that the Fed has a bias towards cutting rates again this year. So, that's an environment that is usually good for stocks. So all those factors are on the positive side. And of course, if the consumer were to get spooked and stop spending, or we have another round of geopolitical escalation, or the inflation picture gets materially worse, I think all of those things would be concerns. And then, the AI bubble part, which is based on faith that these earnings are going to come through where people are borrowing, if that ends, that would also probably lead to a pullback.
Well, and what are then some of the catalysts that you see for the year ahead that can help reignite equity market momentum?
One of the things that's out there is we see the potential for U.S. GDP to surprise to the upside with talk about deregulation and some deregulation coming into place. There's also the potential for a lot of these tariffs now to be negotiated, and perhaps that can calm down. We could get a ceasefire in Ukraine. And it looks like the kind of China-the U.S. tensions are getting better as they move towards a summit later in the year. So I think there's still a lot of things that could go right.
But at the same time, you're seeing some other nations with the US perhaps not shifting in the correct direction when it comes to tariffs and a bit of economic pressure there.
Yeah, I mean, there is a lot of shock and hostility in Europe to the way that the United States has changed things. It's a difficult situation, I think, given there is still a lot of interdependence between the U.S. and Europe. You can debate who's going to get hurt worse if you jump off a cliff and, fall to the ground. But I think both sides would get hurt. So hopefully that's avoided.
And where are you seeing opportunities? Which parts of the world and which sectors as well?
Well, we certainly do still like AI and following that as it broadens out. We think that the China tech can also benefit here. We've seen some strength in APAC more broadly around the memory side. Probably be more selective in Europe around the AI themes, and also, the kind of the picks and shovels going into AI. I think power and resources, industrial metals, those are areas that we like.
And finally, then, we were halfway through this a bit intense week. What's ahead for you, as the week draws to a close? What is Davos all about for you and UBS?
Well, as there is a little bit of a joke, like, what is the Davos consensus? Because you probably want to bet against it at the end of the week. I think we were talking a little bit before how in some ways this year does feel like we don't know if it's right or wrong, but it's not more of the same. It is a little bit of a switch up. But I think that, we have, it's going to be a month now. We're going to see perhaps what the Supreme Court says about tariffs. I think increasingly the focus is going to shift towards domestic politics in the United States, which could reshuffle everything once again.
Well, Mark, when and if it does, we will invite you back to Monocle Radio to tell us all about it and help make sense of all this turmoil. A pleasure having you back on air.
Thank you so much.
Fantastic to hear from Mark Haefele, one of our regular sparring partners on this programme, in conversation there with Carlotta in Davos last week. Now, it wasn't only Mark, as I mentioned earlier. Carlotta also had the chance to welcome back another returning voice to the show in the shape of Ulrike Hoffmann-Burchardi, CIO Americas in UBS Global Wealth Management. We usually hear from her from New York, but she too popped in to chat with Carlotta at Monocle's Davos Outpost. Here's Carlotta.
I want to start by getting your impressions of WEF so far. We're only a few hours in, but is already feeling quite busy along the promenade. Who have you been talking to and what are your first impressions?
I think the most striking first impressions is the windows along the promenade. Almost every window has a slogan around AI. It doesn't matter whether you're a technology company, a bank, a cybersecurity company, consultancy. AI now is front and center to every corporate messaging.
And why do you think that is?
I think AI is no longer just a transformational innovation. It's become a macro factor. It's impacting the broader economy through CapEx, but also productivity increases and ultimately the labor market. And I think the other thing is that it's no longer just an AI, very narrow tech story. It's broadening out to all sectors of the economy. And one area that we were very focused on in CIO was the enablers of AI, what we call the AI 7. So the 3 chip companies, NVIDIA, Broadcom, and Micron, and the 4 hyperscalers, Meta, Google, Microsoft, and Amazon. And now what we have seen is that we're starting to see that it's not only the enablers who are profiting from AI, but also those companies using AI to increase revenue and reduce costs. The AI 7, though, have appreciated by about $10 trillion since the launch of ChatGPT. And at the same time, the other 493 companies in the S&P 500 have appreciated by approximately the same amount. So it seems like when you just look at those numbers, there is time for some catch-up. And we're seeing more and more data points that these companies are benefiting from AI. Last year, it was all about technology companies quantifying the benefits. Microsoft, for example, talked about $500 billion in just cost savings from AI in 2024 alone. SAP, over $180 million in just using customer service. But I think now we're hearing more and more also from banks. JP Morgan said $1.5 billion in savings from just using AI for fraud detection and risk management. And then we have more in healthcare. We have more in logistics and transportation. So I think this year will be more and more about data points in other sectors, leveraging the power of AI to improve margins.
It's really interesting what you're saying there, because we have observed this shift into the conversation, changing from investment into AI to, actual returns and monetization. Do you think not just these factors that you've just mentioned, but what else has helped to shift the conversation towards that direction?
Yeah, one thing is we like to look also at history to learn about how this evolution could unfold. And one thing that we are seeing historically in transformational innovations, that there are typically 2 stages. One is the layer of the enablers or the stage of the enablers. That typically starts off a new transformational innovation. And then there's a handoff to the application layer, to those companies using a new technology. You saw that with the railroads, where it was first all about the railroads, but then later on about industries making use of railroads, whether it's the real estate sector, the industrial sector, and so forth. And ultimately, the vast amount of value creation happened with the users of a new technology. The same in electrification. Utilities ultimately became regulated, and it was the lighting industry, the appliance industry, factory automation, all these things that ultimately drove much larger value creation. And so I think we may be getting closer to that handover point where we are seeing that, at least in terms of stock market performance, also a catch-up of those companies making use of AI. But maybe other than the structural reasons, I do think there are also cyclical reasons why we could see broadening out. And actually, we at UBS CIO call for the great broadening in 2026. That's our equity market call. And the cyclical part of that narrative is very, very strong this year because we have the largest economies in the world, the US, China, Germany, and Japan, all on fiscal expansion course. And they together are more than 50% of global GDP. But starting with the US, the One Big Beautiful Bill Act, that is obviously very stimulative for the economy over time. At its peak, probably 1% to 2% of GDP. In the first half of this year, we think that there will be strong economic growth from both, one, the catch-up from the government shutdown, so the catch-up in spending by the government that now has to take place, but also the tax refunds. So both of them, could be together easily 50 basis points of GDP just in the first part of the year. And then in China, we're still seeing fiscal stimulus. The official budget deficit is about 4%, but then you also have more local spending, more specialty bonds. So could easily be much higher if we take it all together. And then, of course, Germany, no longer the black zero. It ditched fiscal conservatism. And with now 500 billion euros in announced spending on infrastructure and defense, really charters new territories. It's the largest fiscal package since the reunification, and I think will again drive economic growth in particular in this year. And then Japan. Japan also just announced a very large fiscal package, 3.5% of GDP, and that is the largest package since COVID-19. So with all of these economies being on an expansionary path, we think that that's good for global growth. And what's good for global growth is good for equities. In our work, we see that as the main driver on the macro side is real GDP growth.
We know from speaking to you over the years here on Monocle Radio that your job is to make sense of complexity, even in volatile times. But I need to ask you, did you have the US removing Maduro from power, trying to annex Greenland in your Q1 2026 bingo card?
I don't think we necessarily had those exact events in our bingo card, but what we were thinking about for this year, it's certainly that President Trump's political and geopolitical objectives will reverberate across markets. And I think we have seen that in the first few days of the year already. And I think we're going to continue to see that. Greenland, of course, is something that is not new for President Trump. He already expressed an interest in buying Greenland in 2019. And that is because there is a strong strategic interest that he has in Greenland for both reasons of its geolocation and also its rare minerals. So now I think this is another opportunity to take up that topic again. And, probably it's only become more important given that we're now seeing with the ice melting that, the Arctic naval routes are becoming more important and therefore probably more pressing in his view as a strategy objective.
What is your take on, this approach? As you say, his desire to acquire Greenland is not new, but I guess everyone was kind of expecting that with the gap between presidencies, that idea had faded away. Clearly it hasn't. But what is your take on this strategy of using tariffs as, I guess, economic blackmail with, in this case, his allies?
You're right that I think in this presidency, it's the first time that tariffs and economic leverage are being used for territorial interests. And I do think, though, that it's likely going to play out similarly to what we have seen in the prior cases, in particular with Liberation Day, where it started off with very aggressive tariffs and then was implemented much more in a spend-to-spare way, where countries and also companies that invested in the US have been spared with tariffs. So my take would be that, yes, there's always an escalatory rhetoric, but then ultimately it's followed by negotiations. And I do see that there is enough room for potential feasible compromise where you have some security guarantees for the US, you have some international cooperation, you have some resource sharing, but that ultimately there is a way for this to be resolved without the US necessarily owning Greenland.
And I guess just finally, to bring it back, to your presence here in Davos and UBS's work, as we've been saying, this is a place and a time that brings together politics, business, finance. What conversations are you, looking forward to the most? What sectors are most relevant for you and UBS and global investors this year?
Yeah, I think we at UBS, we're going to look at different angles of what type of policy may shape the global economy over the next year. I would say in my case, I'm going to be largely focused on artificial intelligence, participating in an MIT event on the next inflection point of intelligence. And again, what this might mean for the evolution of AI within the enterprise, but also what we could see in terms of new algorithmic solutions. And I think that's a very important angle. We are still quite far away of emulating the human mind at this stage. There's still a lot of deficiencies of what these models can do There's a lot of pattern recognition. There's probably some reasoning, but there's still a wide gap. And I think an interesting debate here is going to be in Davos at the MIT Forum about what we are seeing in terms of new ways that these algorithms could evolve, and ultimately what this may mean for efficiency, but also what this might mean for the performance of these models. Right now, there is so much CapEx that is devoted to AI data centers over the next years. We predict $725 billion by 2027. But that's all contingent on the current technology. And what are we seeing and hearing from leaders in AI on where this algorithmic evolution may lead us?
Ulrike Hoffmann-Burchardi, CIO Americas and UBS Global Wealth Management, talking to Monocle's Carlotta Rebello. And that brings us to the end of this edition of the show here on Monocle Radio. You can listen again and explore more at monocle.com or discover more and find out how UBS can help you at ubs.com. Thanks to Carlotta for her reporting from the World Economic Forum. And one final quick thanks, if I may, to Justin Thurkel-White, for so long a facilitator of and the best supporter of this show. Thanks, Justin, from me and all your friends at Monocle. Good luck. This is The Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.